What's up, YouTube? So the request for a face cam has been real. Okay, I'm just putting on to show you I have a face cam, but I don't really plan on using it unless I'm live streaming. So yeah. So in this video, we'll be going over futures and Forex. We're going to be going over a model for both of them. I don't trade Forex as much now. I'm more on the future side. It's just more professional, easier. Everything about futures is just a little bit better. I do like the time aspect of Forex a little bit better, because Forex, it's too easy, you know, like, you know, when the low is going to be put in the high. So in these lessons, we'll be covering Forex, which is DXY, Euro USD, GBP USD. For the futures, we'll be covering NQ, ES, and YM. All right, so looking at this, you can clearly see the 2 to 5 is the low and the 10 to 12 is the high of the day. That's what you're usually going to see on a bullish day for Forex. And with that information, you can really make a model out of that. So as you can see down here, price opens, drops down, shifts higher in the 2 to 5 range. When you use this logic alone, ignore these two 7 to 10 and 10 to 12. Don't worry about that. Just worry about 2 to 5 when you're trading Forex. In my opinion, that's what I did. Using the 2 to 5, understanding that usually puts in your low or high of the day on a bullish or bearish day, that will help you a lot, because all you really have to wait for is just a market structure shift off a key level. In these type of templates for like a classic buy or classic sell, these are more on the DXY, Euro USD, and GBP USD aspect. I use the classic buy and sell for these. I don't really use them for futures. Futures, I have a whole different time sheet, and I'm gonna go over that a little bit when we get to the future side. But if you're expecting a bullish up close day, you can see the buy side liquidity here. You want, after Asia, price to dip down, putting in the low, and then run higher. And we'll get into some examples here. So looking at this chart, it looks like a mess, right? Without no time delineation, it looks like a mess. So when I add the midnight and the high of the day and 10 to 12, where the low usually gets put in, you can see right here, price runs up, drops down, and then comes back into the range a little bit, obviously into this inefficiency, just to run lower, these equal lows here. And the day prior to that, you can see this was a bullish example. So we have a bullish low of the day here to a bearish sell-off here. Now, what do we do with that information? So going into Euro USD, you could see here on the hourly, you could see price drops in to a gap here. But what do you do with that? How do you know how far down it's going to go? How do you know it's not just going to go take these lows? We're going to drop down into a lower time frame in here and study the price action. But the model that I like to do personally was 2 to 5. I just wait for a 5-minute shift, 1 minute sometimes, but sometimes 3 minute at that. But a 5-minute shift to a liquidity pool or inefficiency. So if you look in the previous day here, you can see there's an inefficiency here. This would be take profiting. You can aim for 50%. You can have the low or the upper quad. Looking at this gray box here, we're going to drop down into this and study this price action. How could you have caught this move? So right here, looking at the 5-minute, what do you notice? Drop it in the comment. What do you notice? Pause the video and tell me what you notice. If you don't notice it, it's fine. There's 2 right answers, to be honest. If you said the breaker, that's good. If you said the buy side liquidity pool up here, that's the answer I was looking for, because a breaker is nothing without that. If you don't have that, don't take a breaker, because that it will turn against you. So with the buy side liquidity pool in this higher time frame objective up here, These two with time of day. So 2 to 5 is known to put in your low on a bullish day. That is the most important aspect, is time. So between 2 to 5, you can see there's a bullish breaker block here. Price retraces into that, leaving this as a breakaway, running at least 30 pips to the upside. 2 to 5 a.m. is what these signature models form. All right, now we're on the future side of things. Looking at this, between 8 to 10 is when I start to look for a high of the day or a low of the day put in. There's more specific times that you can actually look for. That's not this lesson right now, and there's other models used to attack these times. But 8 to 10 generally is going to put in the high or low of the day. You have like a 80% chance that that's going to put in a low on a bullish day and a high on a bearish day. So take a minute and think about what you see in terms of market structure. Looking at price here, you can see 8 to 10, it runs up, breaks down. And for this, I don't like to use the 5-minute as much. I do like the 1 minute when it comes to futures, but it breaks down, eventually running for London low and taking out sell side liquidity. This is the model I look for. There's specific time elements, silver bullets, macros, opens, and there's confluences that will help you with this, like opening range gaps, SMT, comparing YM and ES live and seeing which one's a six sister and if it will catch up or not. Those things I just named, that is the backbone to how I get these trades. So you can see it runs up, breaks down, attacking London low. This is the model I go for when it comes to futures, and I can anticipate these things based on the economic calendar. All right, so looking at this here, you can see price runs up, and this is the 8 to 10 window. Runs above buy side. It has London lows here in terms of a draw liquidity. Runs for that, taking it, eventually going for your SSL, which is the previous day low. So 8 o'clock is marked out here. You can see price leaves a pool right there, eventually running up, taking that pool. So whoever was trying to short before the open got taken out. Price breaks down to the true direction, which is that London low here, leaving a fair value gap entry here, running to London low, also expanding past that to the daily objective, which is the previous day low. This is the model I go for. I look for this model every day, to tell you the truth. And there's ways that you can see these coming beforehand. I do have that in the link below. I'm on a 50% discount right now. All right, so we're going to go over some entry examples. What I like to do is I actually do start in the 15. And I just like to mark out some key levels. So like I say, I like to come in my chart at 8:30, 8:15, and we'll drop down to the 1 minute. So I do see we swept a high right there. I do remember my key levels, so I don't need to be flipping time frames. That's the thing. If you guys see someone just flipping time frames, 15, 1 hour, daily, going back, going forward, they have no clue what they're looking at. I promise you they don't. All you need is to look at your 15-minute time frames one time, mark out some key levels, and just know how to use time. That's all you need to do. Everyone else is just scrolling this way, scrolling that way. They're just reaching. They're really reaching. That's how I can spot someone who's just bullshitting, honestly. But aside that, 8:30, let's see what we have for price. It looks like it wants to creep up for this low. We'll just bar replay this at a good speed, to be honest. Do that. Okay, that's a little bit too slow. We'll just click, honestly. So I like to see a sweep. Now right here, you're gonna run into the problem of, do you want to buy this order block here and then letting it run higher, running up to here, or do you want to wait to see if it breaks down? Again, there's some key things that I can point out about these entries, but it's going to be for your study. As you can see, price right here runs up, takes buy side, breaks down. This is where you set your limit order. So we'll try this. And if it can get up into there, I will sell. So I'm short here. Stop loss above the breaker. Take profit here. Well, we'll go for this low. I'm going to put on another contract there. So now I'm short 2 contracts. And what I like to do is take my first partial out here. I don't know how to do that on this, to tell you the truth. Let me try this. I can't even buy one. So we'll just play this. There's another fair value gap. So if you missed this fair value gap entry here, or if you wanted more confirmation, this fair value gap here looks good. And I call these things out live all the time in my Discord. So there's TP1. I don't know how to... Wait a minute. You can probably buy one back, right? So whatever. We'll just see what happens. So there's TP1. Right there would have stopped me out. Break even, because I was going to trim my stop. Here looks like another good short as well. This is a entry model. This is a change in state delivery. So we'll just pretend I'm short from here. Stop loss above this candle. There's TP right there. So this is all I need. You're not going to see me run into a macro. You're not going to see me run to silver bullet. Like, I trade from 8 to 10. And if I can find something in that range, I'm taking it. The quicker I can be out, the better it is. I just saved the rest of the day for everybody else. So this is example 1. And we'll go to the 15 right now. We'll go to the next day at 8 o'clock and start this back over. Fuck, did I go too far? No, I didn't. Okay, so 8:15's here. When you're spotting drawn liquidity, if you guys didn't watch my 8:30 video or 9:30 video, this part's not going to make sense to you, but fair value gap here in the form of a SIBI. You got buy side liquidity here. And you have a BISI here. If you were to ask me what side do I like more, I couldn't tell you, because I trade time and price. You know, I wait for specific time elements and then I go with the bias I already have. So yes, I'll mark both sides because both sides are going to get hit. I'm not worried about that. So dropping down to a 1 minute. What am I noticing? I do see a nice liquidity pool down here. And liquidity pools are a magnet, so I like that. And it's with a fair value gap. So these two together are really good. Price is touching that fair value gap there. It broke down. This is a short. So we're just going to do one contract because I'm not running into that shit like I did last time. I'm putting my stop loss above the breaker. And I'm going to take profit here. Tags me in. It's correctively moving down, but I'm watching the up close candles as it runs down, honestly. And I can use the 930 open here as volatility to step in. I teach this in my Patreon. Okay, so price actually hits my TP before. So we're up 1200 in 2 days. That's calm. So we'll go to the next day. $8.15 I like to arrive. I'm gonna get rid of these drawings. What I'm noticing, and take a second to think about what you notice, because this is the exercise. If you can pick these levels correctly, your lower time frame is going to be better. It's just going to make sense. Like, you're going to know what you're looking at if you can pick these levels correctly. And how do you know when you have them picked correctly? If both sides are getting hit each day, that's how you know you're on side. It's just about trading there. So I'm seeing this, and I'm also seeing all these lows down here. Well, starting with this one. This is what I would have in my chart, because this is what I see, honestly. And this gap here could be a factor. So we're just going to make that a BISI. We're going to make that a SIBI. So dropping down to my 1 minute, I know how to navigate these PD arrays here. And that's why I said whoever's scrolling all the way back, going to their daily, going to their 5 hour, like, they don't know what they're doing. Promise you. Another repeating thing happened. What do you guys notice? Liquidity pool here. So what would we be expecting? Maybe price wants to nudge this and then maybe run down. Or maybe he wants to use this fair value gap order block here and run higher into this. These are where you take your risk to reward. And I teach how to use these models if you want to be on the buy side of the curve or sell side of the curve. I'm tape reading this order block up into there because I'd like to see us create some sort of structure if we could shift. Okay, so we're breaking down very quick. This is turning into an inversion here. And to tell you the truth, this is looking like a decent short. Let's see what the next candle does. Okay. I'm gonna cover above 50% of this fair value gap, and I'm gonna explain why. The inversion's here, mitigation's here, and 50% of this should be safe. We're getting into order flow now, but this is all what comes with the entries. TP will be, go for this low. Okay, so that's 19 in 3 days. It's not bad. And me personally, when I do a trade like this, I literally walk away. I'll close the chart and walk away, or remain to my Discord. But after this, I'm done, because this is all I'm looking for. And that's why I skip to the next day. We'll do one more day, and honestly, I want to check the opening range gap on this day. Maybe we can talk about something in there. Okay, so 930 dips down to this fair value gap from what I'm seeing. Let's hit regular trading hours. So there's no gap. Usually these days are bad when there's no gap, but it doesn't mean don't trade them. So price breaks higher. You have a breaker here, IOFED, and hopefully we can find some support on this inversion, maybe to get back into this SIBI that we forgot about, which means buy side liquidity is now resting here, and all these are just garbage. So we're beneath sell side. This red line, we're beneath sell side. We hit this, and we have a bullish breaker. So price dips back down, retesting this fair value gap, running higher once more, coming back down into these down close candles here. And for me, this is a buy. Stop loss going right there. TP right there. I could go for this, but I hate when price gets to liquidity, takes it, shifts, and then comes so deep into the range. I'm already trailing my stop. So price runs up, comes back down. TP hit right there. The remaining can probably go up into here. So if you do 2 contracts, you can take one off there, leave the last one running into there if it wants to get there. Let's see. And it gets there. So I hope you guys like these entry models. If you have questions, you can join the Discord. I have a ticket booth in there. Again, the revamp is off 50%. So if you guys want to join, the link is in the description.